Hi everyone, welcome to another episode of Good Day Chula Vista, and today we are on episode 74. Thank you for joining us. Today we're going to be talking about tax appeal, your property taxes. Are you paying too much for your property taxes, or you think you are? Well, maybe you are, and there's a way you can appeal. So stay with us because today we are going to find out what you can do. Well, thank you for joining us, and today we have with us Rob Burden. Thank you for joining us.
Thank you very much. I appreciate being here today.
Thank you. I know you're a busy man, so I really appreciate you taking the time and explaining to all of us your expertise. But before we get started, I want to hear about you. Tell us, I know who you are, but most of our viewers don't, so let us know who you are, what you do, how many years you've been doing it, who's your lovely, precious, gorgeous wife.
Well, the best part is my lovely, gorgeous wife, but you'll have to do with me today. Well, thank you very much for that introduction. My name is Rob Burden, and I am the Executive Vice President of Paramount Property Tax Appeal. And we are a San Diego-based consulting firm that is solely focused on helping clients, such as you, reduce their property taxes. So today we're going to go through a little bit about what your property taxes, how your property taxes are calculated, how they're derived, what can happen to them over a period of time, and how potentially your property taxes can become too high, and when they do reach that point, what you can do to appeal those and bring those down. Mm-hmm. And so we're a firm that's based here in San Diego again. We've been around since 2008. We've done almost 20,000 appeals in the last 10 years. We do about 2,000 appeals a year. We've had reductions of almost $500 million for our clients, and this has resulted in about $500 million in refunds to our clients. And
wow.
So we mainly work in California, but we do work in 38 states across the country. So we have just a little bit of knowledge about property taxes and how.
And you're here from San Diego?
Yes, we are here. We're here in San Diego. Most of our business is concentrated in the 5 southern counties of California: San Diego, Orange County, LA County, Riverside, and San Bernardino, and we do quite a bit of work up in the Bay Area, as well as a lot of work in the San Joaquin Valley.
Oh, even that far. Wow.
Yes.
Okay. Well, thank you for that information. And I know you are married and have how many sons and daughters?
I have 3 children. So my lovely wife works here for Coldwell Banker West, and has for almost, going on 6 years now.
Yes.
I have 3 kids who are all in their 20s now. I have 2 sons. One's 28 and getting married in October of this year. I have a son who is almost 26, and my daughter is going to be 24.
24. Wow.
Yes,
She's a baby, right?
She's the baby. Yes, she is. Yes, she's the baby. So, they are the pride and joy of my life. And as I said, my wife is much the better half of our pair. And I'm lucky
we all
to have
love
all
her. Plus, she's the one giving us our checks. So
exactly
she's
right.
everybody's favorite around here. We stalk her, but she's just a sweetheart. And thanks to you, I met you. So thanks to her, I met you. So this is great. Now, Rob, let's go over. I know that this seems very easy for you because this is what you do for a living, but for us, it's always scary and complicated. So I have some of the questions that you helped me put together for me, so that way we can get more information for them. So let me start with the new one.
Sure.
So why don't you tell us about property taxes? How are they determined for each property? How does that translate into the real estate owners have to pay into the property taxes each year?
Sure. It's a very good question and the very basic premise of what we're talking about today. So in California, property taxes are established when you have, first and foremost, when you have a change in ownership. So if you think about when you buy a house, and for purposes of our discussion here today, if you think about buying a house for $500,000, your property taxes for the most part should be based on an assessed value of $500,000. The idea is that they want to set your value at the market value at the date of the sale or the date of the change of ownership. And this becomes very important because property taxes in California are governed by Proposition 13. And Proposition 13 was passed in 1976 or 1977, and that governs how much your property taxes can go up on a yearly basis. And essentially what happens is your base year at the date of the time of transfer, the fair market value, if you will, is established. And Prop 13 then says that you can own your property, the assessed value of your house, which is what your property taxes are calculated on, can only go up by 2% per year. So being a realtor and being in the business for quite a few years.
What if the property goes up 20%?
And that's right. And if the property goes up 20% in a year and it goes up from $500,000 to $600,000, it behooves every Californian or every homeowner that they are only paying property taxes on about $510,000,
right,
which is versus $600,000. So we always hope that the property taxes go up. That the value of the property goes up much faster than the property taxes do.
right.
But there are situations where that can get sideways. But so remember, the most important thing to remember is fair market value is established at the date of the change of ownership.
Okay.
And they're governed by Proposition 13, which says that your property taxes can only go up 2% per year.
Okay. Well, at least we have that to protect us, right?
Rightfully so.
Right, exactly. So let's see. So that all sounds quite simple.
Okay.
What are some instances where property owners might be overcharged on their property taxes?
Well, how long do you have? We could talk all day, but I will try and keep it. I will try and keep it very very simple.
I always thought there was nothing you could do. That's what assessor records said, that you have to pay, and you get your property taxes. If you don't pay them, they take your house, so you have to pay them. I never knew that you could actually argue them. I mean, I know that back in 2008 when the market crashed, a lot of people were doing that because they were definitely overpaying.
Right.
But usually I thought you were stuck with them. So when you told me, I was like, yay, we can actually appeal.
You can actually appeal, and as you and I talked on the phone, you know, we're going into a slowdown of the real estate
Yes.
market, and historically California is, you know, a boom and bust cycle. So if we had a little correction in the market, it probably wouldn't wouldn't hurt us too bad. I don't think it's going to go back to 2008,
No.
but if you think about it, and I looked it up this morning, the assessor in San Diego, and I have to. I'm a taxpayer advocate. I'm here to help people lower their property taxes.
I'm going to show you this just so you can
Sure.
see how we look.
Okay. And we, we work and we kind of fight against the assessor all the time. But the assessor in San Diego, Ernie Dronenberg, and his staff do a very good job. They're very professional, and they work their job by definition to fairly set the values of all property. And they work in all cases to do that, and I like to give them that respect. There's a lot of other counties in the California, you don't get that.
Okay, that's great to hear.
But I looked it up this morning. The assessor in San Diego County is responsible for valuing 998,298 parcels in San Diego County.
Wow. They're busy.
They're busy, and they have to use, a lot of different mass appraisal techniques, and they can't look at every individual property.
Yeah.
They just physically don't have the time, and that leads to a lot of situations where, the value of the property could be incorrect. It could be incorrect, and for the most part, if you're buying a 4-bedroom house and a tract, and it's pretty easy to set the value.
Right.
But if for some reason there is anything strange about the transaction, maybe the purchase price wasn't disclosed in the documents, how does the assessor do that? The assessor has to estimate what the value is. Maybe you bought the property and you got in and you found out that all the plumbing had to be redone, which would draw down the value. So the assessor might come in and say, well, they paid $400,000, but I really think that property is worth $500,000, and they might put a value of $500,000 on that property, even though you only paid $400,000. Now, realistically, because you knew that there was a plumbing problem,
Yeah, it wasn't worth 500.
it wasn't worth $500, right?
So,
Should be worth $400. Would you want to pay? Because the property tax rate is about 1.25%. So on an extra $100,000, that's over $1,200 a year.
Yeah.
$1,200 a year.
Plus the plumbing that you had to upgrade.
Right, you had to upgrade it, and so that can be one of those situations where they can't look at every house.
Right.
And it's very important that you want to fight that value because, again, that 2%, if you want to start it at $500,000 and go up 2% per year, or do you want to start it at $400,000 and go up 2% per year? So we're going to get into the supplemental bill here in just a little bit. But again, it's one of those things, you asked me, can I appeal that? Yes, and it's very important that you pay attention to that amongst the myriad of things that happens when you buy a new house.
Yes. Okay, so then that's how they
that's just one. I mean, and there's some other things, and we talk to a lot of people. We have what we call Prop 13 issues.
Right.
And if somebody, when somebody calls me, the first question that I ask them is, when did you buy your property? And they say, well, I bought my property in 2007.
Oh.
Okay, well, they probably went through, some reductions in the value of their property. And if they didn't take a look at the value of the property and the assessor didn't do anything about it, their property's been inching up every year. And I was at a Christmas party and talked to someone about, what we did and that type of thing. And he said, I bought my house in 2007. I probably should have looked at my property taxes. And he said, and his response was, but the values have all come back to 2007 levels. And I said, that's great, man. And I feel good that, your house has come back to that level. I said, but if your house went up 2% per year, every year, probably the assessed value on your house is about $610,000 now. So you're paying property taxes on a value that's about $100,000 over what your market value is. I said, have you ever looked at the value on your bill? And he said, I didn't know that I should.
Yeah, I think most of us don't.
And that's one of the number one things that you should look at every single year. It take you 5 minutes, and there's so many tools out there now where you can check and get a rough idea on the value of your property. You should always look. Number one thing you should do is look at the value of your property.
A lot of our clients have impound mortgages. So when they get their property taxes, you guys know that the bank is going to pay that property tax. So usually they'll be like, they'll call me, Faby, I got this. What is this? Is your property tax bill? And your mortgage company is going to pay for it because you have an impound account.
Yes.
So they just like, okay, I'll save it for my taxes. And they don't look. I've never told them to look at that. So I think it's a good idea that, okay, even though they received it and the mortgage company is going to pay, they have to check at the assessed value on that bill.
The bank will not check the assessed value for it. So it's up to you, and the bank is only going to pay what the bills say. So it's very important that the homeowners, and especially for investors, and we do a lot of commercial properties. And in a commercial property taxes are 25% of the operating costs of a commercial property. So if you have investors out there, that own rental properties, or even people, just regular homeowners, they should be checking the value every single year, because it's something that happens, and someone might say, well, it's only $1,200 this year, and it's $1,200 next year, and it's $1,200 next year.
Yeah, that's up.
And if you just plunk that towards your mortgage, you'd have your mortgage paid off in about 18 years. So.
Yep, a lot sooner. Definitely. Okay, so then let's see. So that was some of the property 13 issues. Change of ownership transfer between siblings.
Sure. A lot of times we talked about change of ownership creating a reassessable event. And most of the time, most of the transactions are a husband and a wife, or a pair, or a couple are buying a house, and they're pretty straightforward. But oftentimes, when you get to the point, and I'm getting to the point where I have I have older parents, and they're starting to do a lot of estate planning. And it's okay. Well, maybe I want to add my son to the title. Or, I want to move it from point A to point B, or maybe you have a partnership, and one partnership, it's an LLC, and one partner buys the other partner out. You don't see a value associated with that. What happens is that gets recorded and then sent to the assessor, and the assessor is left to guess as to what the value of your property is.
Right.
And so it becomes very, very important that when they establish a new value for you, first and foremost, you should go to an attorney or actually a property tax appeal specialist to find out the best way to change those things. We get a lot of attorneys that call us and say, we don't know what to do with this. Right. But you should be very, very careful, because if you've owned a house for 15 or 20 years, it's probably, so if you bought a house in the 90s, doubled in value, I think would probably be a fair, fair number. Well, if for some reason you weren't paying attention and you inadvertently added or removed somebody from title, your property taxes could double overnight, because they're going to take the assessed value from where it was
to what it's now.
To where it is now.
Just for adding someone.
Just for adding someone or something simple, something that simple.
But you can appeal it.
Yes, you can appeal it. Yes, you can appeal it, and we will get to that in just a minute. And so, just a couple other things, just to make sure that we're online.
Capital improvements.
Yes, capital improvements. The change of ownership will be the number one reason that your property taxes will get adjusted.
Right.
The second thing is if you make any new construction. That would be new construction being defined as if you go to the city and you pull a permit. If you pull a permit, you can rest assured that the value of your house is going to go up.
Yeah.
And so if you...
They do have time for that, right?
Yes, they do. They have time to catch you on that. The number one thing is I always tell people, and it's a great example, and as realtors, I'm sure you advise people all the time, the best example to use is if you put a pool in your house, and you could put in the coolest pool in the neighborhood, and everybody loves coming, and you might spend $150,000 on that pool. That doesn't add $150,000 of value.
No.
Not in the least. And it might add, as you said, 30, 40, 50, whatever
the buyer is willing to pay for that.
Absolutely. Whatever the buyer is willing to pay for it. But you don't get any input on that. The assessor looks down and says, well, gosh, they spent $150,000. They might very well add $150,000 to the value of your property.
So you won't get it from a buyer, but they will tax you on that.
They're going to get you.
Unless you pay attention.
Unless you pay attention.
And like you said, they're not out to get you. They're just doing the best they can with what they have on their desk.
Absolutely, because that's what it's called. That's what the law calls for. When you make a capital improvement like that,
right.
that increases the value, and that changes the value of the property. So
don't just hate them. They're doing their best.
They're doing their job.
We understand that because we're realtors, and when we have to resell a house, we know that even if it costs you $150,000, you're not going to get that back when you sell it. You might as well enjoy it while you live there.
Absolutely right.
And then, estate planning.
Estate planning. We talked a little bit about estate planning as you're putting, most of the time, if it's, the thing that I was actually a real estate lender for 6 or 7 years, so I have just a little bit of knowledge, and often I get asked oftentimes, I have my property in a living trust. We're going to refinance it, so I have to take it out of the trust, and I'm going to put it back in. That's okay, because the ownership stays the same.
Right.
With a husband and wife or an individual in that family trust, and you're okay there. But again, if you go back to any type of adding people in any way, shape, or form, very, very real possibility that will show up.
Your value.
That will show up as a change in ownership, and you're going to end up getting reassessed. We actually have a whole division in our office that tracks all of those across the state, and we have a way to gather all it's public information, and we make a whole market out of people who have done that, to go in and look at the value and or to see if everything was done administratively correct. So it's a big problem.
That is a big problem. One of the things that I forgot to mention this before, but I'm thinking when you're a senior and you sell your house, you can bring your tax, your property tax that you have right now, the percentage that you have, the amount to the new property if you're downsizing.
That is correct.
And if you didn't do that and you bought the house and you find out 3 years later, your daughter tells you, hey, you didn't do that and you're being paying all these taxes on this new price, can you appeal that or you're late? Sorry.
No, that's okay.
I just came to me right now.
I was trying to think the easiest way. I will tell you that there are certain time frames. That becomes a base year transfer.
Right.
That becomes a base year transfer, and You lose out on the 3 years. If you said 3 years after you did it, you lose out on the 3 years.
Oh, okay. So you don't get it. They don't retro.
There's nothing. Well, there's nothing you can do about those 3 years. You can appeal it and get it adjusted going forward.
Okay.
Does that make sense?
Yes.
So you can't go back and get the 3 years, but you can adjust it going forward. If you'd have done it in a timely manner, and it took you 2 years to resolve the appeal, you can go back and get those taxes.
Because you got it started.
Because you got it started on time.
Okay.
But if you have, I think I have to double check the numbers, but on a standard base year, you have 4 years.
Right.
To remember that. Okay.
Okay.
Can we tell you a little bit about the appeal process?
Yes, tell me about the appeal process, please.
Okay. Number one thing to remember before we get into that is just if you have any type of change of ownership, it's going to require a deed or title, probably going to get your property taxes reassessed. You need to look at those. If you have any new construction that requires permit, probably going to you're going to get reassessed. Very important that you look at it. So, let's get to the appeal process.
Before you go to the appeal, let me just tell you, Stephanie Puente, that's one of our lenders, first-time programs. She's there watching because she wants to know. And then I saw, who was up here? Camille, nice Padre socks, Rob. Camille.
I'm a big baseball fan. These are my Padre socks. These are my swinging friar socks.
Of course you knew he was going to bring those socks. Let's see. There's Eileen there. Thank you, Eileen, for watching us. Marisol Nunez, Osiris, Jeff, thank you for watching us. Edgar Leti. Anna, thank you for watching us. I hope you guys are learning. Thank you, Sandy, for watching us. I know this is going to help you a lot with your clients. And Sergio Palomino, great information. Yes. Thank you so much. Sergio, how many times can you transfer the tax percent if you're a senior? How many times? Oh, like if you, I think only once, right?
I believe it's once. I can double check that for them before I give you an answer on that. I believe it's once.
Okay. We'll find out. But I think it's, I had heard that it was only one.
Yep.
Now let's talk about the appeal process. How do you do? Because that's where the trick is. We want to know the secret.
Okay, the appeal process. The appeal process happens every year, and again, we talked about that the assessor just in San Diego County has to do 998,000 properties each and every year, and in a fluctuating market, especially when it's going down, it gets even harder. So California has enacted the appeals process, which gives you the legal right every year to appeal your property taxes for that year. And that's just standard. Let's say you bought a house in 2000 and you look down in 2018 and think you're overassessed. And what you have to do is you have to file an appeal with the San Diego County Assessment Appeals Board. And you have to file that between July 2nd and November 30th.
Okay.
And you have to, it's a very easy process.
July to November. Okay.
Yeah, it's July 2nd through November 30th. And you have to have it on, just get it on file. It's a very easy form to file. It's 2 pages long. You can get the form from the San Diego County Clerk of the Board. The Clerk of the Board handles that. And if anybody wants to ever get an application, they can go to sandiego.gov/COB/AAB.
We'll add it to our video at the end.
Yeah, we'll add it to the video at the end. And it's the San Diego County Clerk of the Board Assessment Appeals Board.
Okay.
And what happens is you fill out the form. It comes with a nice little video and explains everything that we're talking about in a much shorter time frame. And it explains to you how to fill out the application form. It's a very simple form. You fill it out and you file it. And you have to make sure that it's at least postmarked and or delivered by November 30th.
Okay.
If you don't do anything about that and you don't file an appeal, you lose your legal right. There's nothing you can do.
Until the following year.
Until the following year. You have to pay those taxes, so it's still the following year. So all of my clients, we file appeals every single year. If we get back and look at the property and decide there's nothing there, we just withdraw the appeal.
Okay.
But it's simply to protect your legal right. You have to get it on file. If you come back later and go, gosh darn, I realized my property taxes were too high last year. What can I do? There's nothing you can do about it.
Not anymore.
Nope.
Okay, so you file it in advance and then...
You file it.
Yeah.
Okay? And that is simply what they call a Proposition 8.
They don't require an appraisal, anything like that?
Nope.
Okay.
And what happens, appraisal would help you,
Right.
Appraisal would help you, but to go through the process of for just a home, it depends upon the property type. But so you file the appeal, file it in November, and by law, the Assessment Appeals Board has 2 years to hear your appeal. So it's a lot of hurry up and wait. So you file the appeal and then you wait. And San Diego is about a year out right now. So for appeals that we just filed in November of this year, I probably won't get to until probably November of 2019 because they're about a year out.
Are you still responsible for paying those taxes while you're waiting?
It's a great question, and I get that tax all the time. 120% yes.
Darn it.
Sorry, I know. People say, "Well, I put my appeal under property. Doesn't that mean I
waiting
don't?"
for the answer.
I don't have to.
Yeah,
I don't have to. I don't have to pay for. You don't have to pay my property taxes. No. Please pay your property taxes. If you don't pay your property taxes on time, they will hit you with a 10% penalty, and there's no way you're going to get out of it. So yes, be prepared to pay your property taxes.
So you'll be reimbursed if they adjust it later.
They will refund you the money, not only the amount of the lowered property taxes, but they will give you interest at a whopping 3%.
Wow, see, they're pretty fair.
You see? Yeah, so you're gonna get the money back
With
with a little bit of interest. You just have to wait for it.
Okay.
So you file the appeal. Takes about a year. What happens is you are going to have to do some homework during this time because you want to get together your case. And for most homeowners, you know that if you do not have a unique property and you buy a house in Otay Ranch and it's a 4-bedroom, 2,500 square foot property on a 25,000 square foot lot, you can probably get a model match. If you look down and you look at your bill and you look at your bill and say, it says that the value of my house is $500,000, but I know that if my neighbor 3 houses down, per Zillow, just sold his house for $400,000, and the person 2 blocks over who has the same model match sold it for $405,000, and the house 3 blocks down sold for $400,000.
That would be an easy one, yeah.
That would be an easy one. And you walk in and say, bring 5. You have to bring 5 cases. Put it together. Put all your homework together, and simply say the value of my property for property tax purposes. You have me at $500,000, and I have these 3 model matches here that are right there that are $400,000, and I think the value of my house should be for property tax purposes. Should be $400,000.
Now, if they're talking to a realtor, trust me, they're like, "Oh no, but mine has more things than that one that's over."
But remember, see, you got a pool, right? But you only have it's not a $150,000 pool. It's only a $40,000 pool.
They want me to sell it for $150,000 more.
Yes.
Okay.
And
so in that case, it's simple. But what if you have a house in Jamul, which is a unique house that must be hard to get a comp for that.
That's where you want to look at having potentially an appraiser come out, potentially to have an appraiser come out and do the appraisal for you. Your third option is to hire a professional firm that does that.
Right.
And we get into arguments all the time, and clients say, "Well, I have my property appraised," and I said, "Well, let me appraise it." We're a taxpayer advocate, and this is all we do, so we understand where all the tricks of the trade are.
Exactly.
But yes, when you get into more complex properties and a person who doesn't have a background in this, it's kind of wise to have somebody do it. Mm-hmm. The things that when you talk to a firm that handles this, you want to ask them, how many appeals have you done? What is your success rate is going to be? And the number one thing, some people want to charge you on an upfront basis. Well, I want you to write me a check for X number of dollars, and I'll do this. Do not do that. Do not do that. Almost all the reputable property tax appeal firms will work on what's called a contingency basis. In other words, there's no fee to you unless they put dollars back in your pocket. And they'll take a percentage of it, but there's never an upfront fee. They handle everything, and you do have to give them a little bit more because they're carrying the costs and they're doing that. But no, don't ever pay an upfront fee. There's enough reputable firms out there that will do it for you on a contingency basis.
That's great advice, especially asking how many appeals have you done and how successful are you? what's your
Ask them
success
for their
percentage?
success. Ask them for their success rate.
Yeah.
That will be a key. That will be a key component to all of
Do
this.
the same when you're hiring an agent.
Yes,
Right?
absolutely, absolutely. You've got that right there. So, just a couple other things that we need to know. So you have to do a one, and I will give you a word of note that it's the appeal is only for 1 year.
Okay.
And you have to come back around and you have to do it again the next year.
Okay. Even if you're still waiting?
Yes. Well, if the value is still there, yes, you could potentially have multiple
File.
years. Yes, you have multiple years.
Just hire an expert.
Hire an expert as part of the process. So you have between
Seems
November 1st. July 2nd.
July 2nd.
And November 30th.
So you have a few months to apply,
Absolutely.
to file the
Absolutely.
claim.
Absolutely. One of the things I do want to touch on while we're here, and if somebody's got some questions, we can answer those, but I want to get to that supplemental.
Yeah, that's what Camille was asking. Yeah, because we were talking about that, Camille, before. So she wants if you can elaborate on the supplemental tax bill.
Sure.
Because I wanted to know if it's really hard for us realtors, and I'm pretty sure I'm speaking for a lot of my friends, that when a client comes to us and we don't know how to tell them how much their supplemental bill is going to be, and it's really hard because you're telling them everything to be prepared for, but when it comes to the supplemental, we have no clue how to tell them. So explain to us what the supplemental bill is to our viewers, and then can that be appealed as well, and how?
Okay. The supplemental bills could mean a number of different things, and I'll break it down into two categories for you. Okay, at the change of ownership,
Right.
and then for new construction.
Right.
And so
Schools and things that happen on the
yeah,
road.
mechanically they're the same, but kind of two separate issues.
Right.
So what happens is if you buy a house, and again, to use our $500,000 example, you are going to be responsible from the property taxes on a $500,000 value from the date you bought it going forward. Anything before that is the responsibility of the seller. So what happens is, and let's for purposes of this conversation, let's assume that the value of the house that you purchased is $500,000, and that's fair market value. And let's assume that the seller had has had the house for a long time, and the assessed value for property tax purposes was $200,000. We all know that as part of the transaction, and hopefully they withhold enough money to pay your property taxes on $500,000.
Right.
But officially and legally, the assessor has to change the value from $200,000 to $500,000. And what's going to happen is they're going to send you an escape notice and a supplemental bill for that. And you are going to have to pay some in, some depending upon when you do it. If you do it in October, you're going to have to pay in November and in February. And it feels like I'm paying a lot, but it's just kind of smoothing it out. Essentially, the number one thing you have, although the timing of the money might be because you have to make two payments for the next year because the dates run from tax years run from July 1st to June 30th, you are responsible for taxes on the assessed value from the date you purchased it.
So let me see if I get this right, so
Right.
I can explain it to them.
Sure.
So let's say, like you said, the seller bought it for $200,000. He's been paying taxes on it, property taxes based on $200,000. Now my buyer is buying it for $500,000. Now the assessor's record is going to get what the amount was of the taxes of those $300,000 that the property increased in value.
Yep.
And then divide it in 12.
Correct.
And then my buyer is responsible just for paying that difference those months. If he bought in November, it'll be 2 months.
It'll be November, December, January, February. It would take you all the way through to June.
Okay, all right.
Right, so that's why they feel like it's a big bill, but it goes all the way to June of next year.
Okay.
That's why it feels like such a big bill to them.
Because they're paying in advance.
Because you're paying you're paying in advance, right? So the tax year runs from July 1st to June 30th. So that's why it feels like, gosh, I got hit with this big bill. Well, yes, because you're paying all the way forward to July.
Right.
Or to July 1st.
So I guess for us realtors, we got to see the assessed value of that property at the time, and we can easily go into tax records and see the bill, and we can see what it was assessed at, and then if there's a big difference, then we'll know that it's going to be big supplemental tax.
It's going to be a big supplemental tax bill. Exactly right. Exactly right. And so if you look at the supplemental tax bill, you have to pay it. You know, as we said, you have to pay it. But
And you can appeal it also?
yes, so you want to look at the value because, again, going back to Prop 13, that sets the base year amount.
Mm-hmm.
And you have 60 days from the date of the bill
Okay.
to get an appeal on file.
On the supplemental.
On the supplemental.
Okay.
And that is your base year. That will set your base year. So you have, just remember, you have 60 days from the date of the bill or the date of mailing, whichever is later.
Okay.
Riverside County is historically, notoriously bad on sending the bills. That I had a client who had a supplemental, and we went through, and he called me, and he's like, "Hey, are we okay here? Can we get this on appeal?" And I said, "What's the date on your bill?" And he said September 18th, and he had called me on like November 20th, which would put us past the 60 days. And I said, "Gosh, we're out of that." I said, "Did you by chance save the envelope?" And he said, "Yeah, I did." And the Riverside had waited until November 5th to send him the bills.
So they printed them and they didn't mail them out.
They didn't mail them out for a month and a halh.
Oh, that's good to know. Save the envelope.
Save the envelope when it comes in, and that way we were able to get the appeal on file for him because the bill wasn't mailed out until 6 weeks later. So it's the latter of. So the things you have to remember is if on a normal going forward year basis, look at the value on your bill. If you think it's high, you have from July 2nd to November 30th to get an appeal on file. If you get a supplemental from a purchase like we just talked about, or the same thing with new construction, because if you get new construction, probably depending upon how much you do, 6 months after it's completed, you'll get another supplemental bill. You'll get an escape notice and another supplemental bill. You have 60 days to get the value of that. If they charged you, they increased your assessed value by $150,000 for that beautiful pool you put in, you look down and say, no, I think it should be closer to 30. You have 60 days to appeal that.
Okay. So you pay it and then you just wait for that appeal to go through.
Yep.
But you still pay what it says on the bill. Do not hold off on paying, because then whatever you were going to save, you are going to end up paying it in late fees.
Absolutely. Absolutely.
So what else can we share with them about?
Well, we always like to. I turned my phone off, but I forgot to turn my watch off. I apologize. My phone started ringing. We've covered the basics, and I'd be more than happy to answer anybody's questions offline that they have, because I hope we kept it at a reasonable level here for you and didn't get into too much stuff. I do want to bring up some of the stuff that's on the horizon that could very significantly affect your property taxes, and that is there's been a lot of rumbling about the repeal of Prop 13.
So what is Prop 13?
Well, Prop 13, again, it goes back to, it basically sets how much your property taxes can go up
every year.
So once you set that base year value, upon change of ownership, it can only go up 2% per year. So my mom bought her house in 1966, and my mom has a very, an incredibly low tax value.
Oh my God.
And if they repeal Prop 13, her tax value will go through the roof. And for people that have owned their houses for a long time, it would be a significant blow.
Devastated. Especially retired couples.
Yes, and so what we're obviously, this for us is a big topic because it governs everything we do on a daily basis. And the rumblings right now are that they want to do what's called bifurcate or split the roll, the tax roll. And essentially what the proposals are right now, and they have not made it through all the way through the California legislature, but they have been floated about, is they want to take all commercial buildings, what we're sitting in here, our office space, and put those onto one tax roll, and take all of the single-family residences and apartment complexes and put those on another. Keep the protections in place, governed under Prop 13, leave those alone, and reassess every single commercial building that there is.
Wow.
Again, 998,000 parcels of land. You can see what an insane project that was going to be, and we think that it will have. We're following this closely, and we haven't gotten to a point, but we don't think that it'll be good for commercial real estate values. The other thing that we believe that is if they take away the protections from Prop 13 from the commercial properties, that it'll only be a matter of time before they take it away for the residential.
Yes, we have to make sure we stay on top of that and vote and do whatever we can so it doesn't
and take
happen.
away the National Association of Realtors and ask them to call all of your elected representatives for the state of California.
Yes, yes. You know, we here at the office, they get us all involved whenever something's going on. We all get to sign up and send the letters,
Right.
and it's always good to be part of it. Jesse was asking, when should we expect to receive the supplemental bill? I received my tax bill, which my escrow company paid last year, but I haven't received a supplemental. Date of purchase was August 2018.
August 2018, I would expect it any day. I usually tell people two months to 6 months, depending upon the time of the year, because the tax collector is separate from the assessor. It has to go from the assessor to the tax collector. Tax collector is processing a lot of bills right now, so I would probably guess 2 to 6 months.
Okay. Now, and everything that is going on with the government right now, the shutdown, does it affect any of these departments?
No, it doesn't, because that's all a federal shutdown,
Okay.
and this is all at the state level, state and or county level.
So this wouldn't affect. So you should receive it pretty soon, Jesse.
Yep.
Keep an eye on it. You will get it. Trust me.
You-
They might
they-
be behind, but you will get
They
it.
might be behind, but you will get it.
Yes, I always tell them, before I used to, we sign disclosures with our clients, and I always tell them, okay, this is the supplemental, and you're going to get it. They sign it, and then guess what? 6 months later, they're like, well, you never told me. So now when I'm doing disclosures, I'm like, remember this one? I'm going to sing and dance. And then when they call me, I'm like, remember when I was singing and dancing? That was the form. They're like, oh, yeah, I remember. So I found a way to make sure they were, because it's important, you want to save that money. It's a lot of money sometimes.
It is a lot of money, and it's a shock to people.
Yeah, so I care about my clients. I want to be the realtor for life, so I want to make sure I prepare them, not
Yes.
just hide it from them. It's not a-
Absolutely. Absolutely.
prepare them. I think the more you know, I think this is important information, because you taking the time and coming here and explaining, because a lot of this stuff I didn't even know. I never would have thought you could appeal the supplemental tax.
If it makes you feel any better, before I got into property tax, so 6 years ago, I didn't know it either. So, you learn a lot. And I'm and I was a CPA for a really long time, and I didn't know it. So.
Sometimes we think, well, that's the government, and we
Yep.
need to pay it.
Yep.
Well, this is great information, and I'm gonna have the website. He's gonna give us a website that he gave where you can get that form to appeal. We'll share it with you guys. What if they need information and they need to hire someone? Where should they go?
You can do two things. You can Google property tax bill. That's your number one thing. And I'll give you my contact information.
Okay.
And I can advise people, and I'd be happy to do that for you. There are firms that handle more, smaller residential than we do. Residential is not our strong suit.
Right.
We do a lot of bigger stuff, but I would be more than happy to make recommendations or just to talk to people. Sometimes the most important thing for people is if just somebody to talk to them and explain the situation, because it is all new and they're trying to figure out if it's right or it's wrong. And I would be more than happy to help anybody out that you need.
You're always so good with helping the community.
Yeah, so I'll leave
Thank
my
you.
contact information for you,
Yeah.
and they can reach me, and I'd be more than happy to help anybody.
We're going to have it on our website. If you go to my website, and there's a tab on the top that says professionals, most of the people that have been here in our show, we have shared their information there, and he will be there as well, and you can email him and he'll get back to you. That way he can, because sometimes they'll go to the wrong person and they are charged, and like you said, and make sure that you're interviewing whoever you're going to hire. Make sure that you know that they've been doing it for a while.
Yep.
Okay, well, thank you. Let's do the raffle. So
All right.
you said you were gonna give us something for our
Yes,
viewers.
I will give away a free.
wanna-
I'll give away a free property tax
that open.
evaluation.
Let's put
I'm
it
gonna
here.
do two. Okay. Oh.
Okay, let's put it here for now.
All right, I got one already.
Okay, so that's gonna be the first one.
And
And
then
hold on, let me do the little drum here.
And I'll get the second one. I'm gonna get the second one from the bottom.
So now you said you had something for them. What is it that you're gonna give?
I'm gonna give somebody either. I know we have a lot of realtors on the show today.
Yes.
And so I'll give a free property tax evaluation either to yourself and or to one of your clients.
Okay.
And we'll take a look at, supplemental bill, the value of your property, and let you know if there's a case for appeal or not.
Okay.
Is that
So
fair?
any of the realtors who makes a comment here will share that information with him, your name and your email, so that way he can do that for you. And then these ones are going to be the 2 Starbucks cards. So you want to open the first one?
I'll open the first one.
Okay.
That's pretty good.
Look, we even have clapping.
Marisol
Marisol Núñez.
Núñez, there you go.
Yay! Marisol, felicidades. Now let's do the
Let's
other
do it
one.
again?
Yes.
Okay, all right. There we go. Katie Hansen.
Katie, yay!
Oh, nothing to-
So I think, Marisol, we have your address, but Katie, I don't think we have your address, so make sure you send it to us. And you can do it through the messenger here, not here publicly, please. And then we'll mail you your card, or you can come and pick it up here at the office. We're here in Eastlake. Well, thank you so much. This was great information. We'll put your information there on our website.
Okay.
And hopefully this is not the last time we have you here.
I enjoyed being here, and I'll be happy to help anytime.
Thank you.
Thank you.
Thank you, guys. Bye.
You want to do the last one?
We did.
There's 2?
Yeah.
Which ones?
And his,
Yeah, that one, they're going to put a name here. Yeah, because that one is for a realtor.
okay.
We're good.
Bye.